Good morning, LT. How are you doing this morning? We have got a FTSE 100 which rallied without coming back without coming back yesterday. So I think it probably will. Proved to be a dangerous strategy yesterday, trying to sell it off to buy it. So I don't think I'll be doing that. Even though we are in a sell zone, we might not be quite there yet. Let me just see what we might have. Now, if we get up to just a little bit higher, then we could take the short on, but I think here it might still be a little dangerous. Let's see what we got. There we go. That's where I'll be looking for. So probably about another 60 pips up, I think would be the area that I'll be a bit more comfortable selling. We can see that there is an area along here, which we touched yesterday, just this high here, and we could extrapolate that along even further. So it might just find it a little bit tough to get through that initially. But I think, let's see what we got. Touch there. Yeah, looks like there's support there. It became resistance here. Looks like support. It's a pretty strong horizontal level, but I'd still like to see it just a little bit higher before, genuinely looking for that sell zone. It does look pretty good, doesn't it? So initially, we're probably still looking for the upside. Realistically now, I'm not sure where. I don't like this level much. It's a little bit too shallow to my mind. I would like it down around about 80 pips, really, before looking for upside. The very, very first move has been aggressively selling off, so it does suggest that there will be some sort of sell-off this morning. So maybe the go short to go long is okay today. Yeah, it doesn't seem as dangerous today, does it? Really is on its way and motoring, but I think the daily pivot will probably hold it up initially, but I just like it a little bit lower. What I'd like is just a bit higher and then look for the sell, or a bit lower and continue to look for the buy initially, and back into the area, really back into that 90 area. That's where I'd really like this market to come to. So we've got some time on that to wait. We're kind of in the middle of no man's land. No. Oh, you're short. Oh, well done, mate. Well done. I like that short on the pound. There was a gap that needs to be filled, certainly on my charts, which is just not quite there, actually. Not quite there. So a little bit further to go with the pound. I do like this one as well, I have to say. I think nice trend starting here on the hourly chart. First lower high here. We got a lower low here. Looks like we got another lower high. So it looks like we are actually in a pretty good trend. So anybody looking to pick this up, then you're really looking at this particular trend line here. So bounces back into this area, and then going down again. But yeah, I like the pound for some downside. I think that's a great trade that you've got there. Really like that LT. Good work, mate. Good work. Okay. Anybody looking at anything else? I think it's going to be kind of quiet, really, for us, just for a little while. It does look like the FTSE's ready to start its decline, which it does need to do. But these things do tend to hold on longer than we think. The only thing with this is that the move to the upside has been so aggressive that the move to the downside can be equally so. Now, let me just see where we're probably trying to pick this up. Still, that monthly pivot looks obvious, doesn't it, at the minute? Let's just do a fib on that as well. Not keen on that daily pivot. Yeah, I still like this area here, which looks like not quite yesterday's breakout, but coming down to this level here would be palatable for sure. So let's see if we can get it down there. Not sure if he's going to get quite that far straight away. Right, let's see what else there is. Euro dollar. Okay, let's have a quick look at the euro dollar as well. People calling for a weaker dollar. Looks like a head and shoulders pattern here on the hourly could be forming. Yeah, it looks like further upside. Looks like a bouncer. I quite like this actually. It's there is a distribution pattern going on here, but it'd have to break through this level before we could really go for the short. So a close below and then a retest of the daily pivot, and then the short looks quite attractive. Until that point, there's still the long in the market, and it looks like a not bad actually, not a bad trend line there. So if it gets through that area, then it looks like there's some open water for the long, but might get a little bit trapped in here. Let's see if the pattern's this instead. Yeah, there's a pretty tight range there to break through, but I suspect if we get through this area, then either way there's going to be 30 pips in a direction. So watch out for which way it goes. I quite like it for the downside. I'm not really. Let's just have a look at the news and data. Right, so what do we have? Monetary policy minutes. We'll look at that in a second. I want to see what's going on with the Aussie. Average earnings. This is always going to be an interesting number for the pound. So I guess LT, you're gonna have to watch out for a few bits and pieces here because there's a bit of pound data today. Claimant count changed. Neither of these two will be that significant. This number in this number here in correlation to this number here will be fairly significant. So if the wage, the average earnings index starts to grow, the forecast is that it shrinks, which isn't particularly good for the pound. So we'll have to see what that number brings. If that number is weaker again, then expect to see some further weakness there. Unemployment rate. Really, what you want to see for a stronger pound is the unemployment rate shrinking and the average earnings getting high. Getting towards that 3.6, 3.7%. Let's just have a look at the graph on that. Yeah, it's pretty good actually. Pretty good graph. So there's been some decent average earnings numbers from the UK. So they're forecasting for weaker, but just take a look at that. I don't think it's going to move it significantly, unless this is an absolutely crazy number. But that's just something that we need to be aware of. What else? Bank of England, Carney is out later, so again, that could weaken the picture a bit with the pound. From what I've heard, he might well be talking about lowering interest rates into the new year. So not for the next interest rate announcement, but possibly after that. So let's see what he says later on and see if that gives some extra juice for some downside, which I suspect it probably will. Right, let's see what the Bank of Australia have said. Members present, other members, financial markets. Members note that interest rates were very low around the world, with a number of central banks having eased money policy over recent months in response to downside risk to the global economy and subdued inflation. Market expectations for further policy easing by central banks had been scaled back over previous months, with concerns about the downside risk receding a little. Interesting. The US Federal Reserve has indicated that any further reduction in the federal funds rate would require a material change in economic outlook. Now, we want to pay attention to this, because this one sentence here is telling you that the Fed is unlikely to reduce the interest rates. Which that isn't particularly good for the market and is good for the dollar potentially. So interesting to see what happens here. So the US Federal Reserve has indicated that any further reduction in the federal funds rate would require a material change in economic outlook. So we've got to start to see a few shocks in the system, really, for the Fed to change their particular stance. Reflecting these developments, market pricing had pointed to a narrowing in the degree of uncertainty around the expected path for the federal funds rate. Globally, longer-term government bond yields had remained at very low levels, but had recently slightly in recent months as the prospects for further easing in monetary policy had diminished. Okay, so let's see if there's anything else of interest here. Financial conditions, accommodative, robust, with the ASX 200 returning to highs reached in July. Foreign exchange rates have been little change over the previous month. The Bank of China had continually to implement targeting easing measures to support financial conditions while remaining conscious of the need to contain fiscal stability risks. More broadly, emerging market central banks had eased monetary policy in recent months. Okay, nothing there. Raw mortgage rates. Members noted that data from lenders. Nothing there. Internal economic conditions. So members observed that there had been little change in the global outlook over the previous month, but that some downside risks had receded. The near-term uncertainty around the US trade policy had diminished because some of the previously planned tariff increases had been postponed, and there was some prospect of an initial agreement between the States and China. So it really that suggests further look for upside. In addition, a hard Brexit was assessed to be less likely. So really, this kind of sentence does suggest that we're probably looking for further strength in the economic picture right now. Weak trade outcomes had continued to restrain growth in output, particularly for export-oriented economies. Survey indication. Now, this is interesting too. Weak trade outcomes had continued to restrain growth in output, particularly for export-oriented economies. So, what with a trade war, if we are looking for weakness in a currency, the currencies that we want to be looking for weakness in are the currencies that have a high export number. So the big exporters of the world, the likes of Japan, for example. And it's easy to do. You just find that the countries that have trade surpluses, because that suggests that they have high exports. Slower growth in China and Italy, largely unrelated to trade tensions, had also continued to be a feature of the recent pattern of global growth. In China, indications of activity have been weaker in October. The real levels of retail sales and fixed asset investment had declined in October, and the output for a broader range of industrial products remained subdued. Members noted that in response to slowing growth, Chinese authorities had eased minimum equity capital requirements for a variety of infrastructure projects. So they're going to continue to build there. In India, the extension of the monsoon season had exacerbated existing weakness in the economy. Interesting. So there's a few things there. Conditions in established housing markets had continues to strengthen over the previous month. That's good. Business investment appear to have been eased in September quarter. Information from the ABS Capital Expenditure Survey. the CapEx survey had provided the fourth estimate investment intentions for 2019-20. Non-mining investment was expected to be weaker than previously envisaged, so that's not good for Australia. While the survey continues to suggest that mining investment would contribute to growth over time as firms invested to sustain in some instances. So monetary policy. Domestically, after a softer patch in the second half of 2018, appeared to have reached a gentle turning point. GDP growth in September quarter was expected to have continued at a similar pace since the beginning of the year. So we need to watch out for GDP, because that means they are watching for GDP. When they mention it, that means they're watching for it. So we need to check the Australian GDP, very important. Most of the partial data preceding. However, members noted that weaker growth in household income continues to present a downside risk to consumer spending, and a low appetite for risk could be constraining businesses willing to invest. So we need to watch the business investment number from Australia as well. Okay, so the decision, the board decided to leave the cash rate unchanged at 0.75%. So it looks like they're a little bit concerned. As part of the deliberations, members noted that the board had the ability to provide further stimulus to the economy if required. Members also agreed that it was responsible to expect that an extended period of low interest rates would be required in Australia to reach full employment and achieve the inflation target. The board would continue to monitor developments, including the labour market. So again, need to watch the labour market and GDP, and was prepared to ease monetary policy further if it needed to support sustainable growth in the economy. So again, back to GDP, full employment, and the achievement of inflation target over time. So that particular report is just giving us a little bit of indication of what we should be looking out for, certainly with the Australian market. Now, would what mean a turn on the FTSE, buddy? If I mean, those numbers are kind of like, they're numbers that we all know, but they are numbers that we should be paying extra special attention to really right now. Let's just have a quick look at the Aussie. This is the Australian stock market. Continues to move to the upside. A head and shoulders pattern seems to be forming on that one. So there might be a bit of distribution going on here. Could be a bit of profit taking. Let's check gold for the day as well. Fairly stable, but moving, easing higher by the looks of things there. Aussie dollar. So the Aussie dollar, I mean, just reading that statement, there was no suggestion that that there would be anything particularly positive out of Australia. So no huge surprise that the Australian dollar is weakening. Let's just have a look at it across the board. Weakening against the CAD, weakens against the Swissy, weakening against the Aussie, against the yen, sorry, and against the Kiwi. How's it doing against the euro? Yeah, weak against the euro. Euro is up. And let's have a look against the pound. Pound is slightly better off against the Aussie currently. So it looks like the Aussie dollar looks like the play for the day if you are looking to get into a trade short. Let's just double check. Yeah, it looks like the monthly pivot is a bit of a beacon down here. So that there's a target down there to aim for. The Aussie dollar certainly didn't suggest that there was anything particularly good coming out. Looks like we might be at a point of potential support here. Yeah, there's a little area of support here, so there's probably a little bit of upside from this point, but after that, after any kind of retracement, then be looking to short this one again, probably at the high there at 68.60, maybe 68.60 for some downside in the Australian dollar. Oh, if the numbers are good from the UK. Yes, potentially. Yes, I mean there's been a bit of a decoupling between the normal service of the pound and the FTSE. You know, usually you'd see the FTSE weaken while the pound strengthens, but what we've seen is the pound and the FTSE both strengthen together. So if we get some weak numbers from the UK, then that would probably weaken the pound, and it would probably hold the FTSE. You know, the FTSE is unlikely to collapse at the same time, not collapse, but drift down at the same time as the pound. It just doesn't tend to do that. So if we say that business is normal today, we've had Friday and Monday where it's been, you know, fairly astonishing moves in both of those two products, maybe more so the FTSE, but with some potential weakness from the UK, that would probably weaken the pound, and the pound is already in a downtrend, so it'll probably continue that downtrend. And the FTSE will probably either hold firm or possibly start to push up after that particular point. So it won't affect the FTSE negatively, I wouldn't have thought. Let's see what the numbers are. You know, but the way that those forecasts look, it looks like it's going to be a fairly arbitrary figure, and maybe nothing of huge note for us. But you know, it's one of those things that LT, the chart ends up having to tell you what's the real takeaway, because you know, trying to what we've seen is, as I say, is a decoupling between the two. You know, the pound has rallied, and so is the FTSE, certainly on Friday, and that's so unusual. That's, you know, that's just not been the case recently because of the way the kind of profits are brought back home. You know, it doesn't usually help FTSE 100 companies with a stronger pound, not too strong anyway. But that's not what we've seen recently. So maybe that trend is going to continue. I suspect we're probably going to get back to business as normal fairly soon. So those numbers do need to come out, and we'll see what happens. But I would suspect a muted pound would probably at least hold the FTSE where it is. The FTSE's not coming down hard. You know, if it comes down, then it's going to bounce straight back up again, as long as it's before the end of the week. So we do need some weakness in the FTSE to get long, but I'm not prepared to play the short just yet. I'd actually like to go short FTSE, but I'd like it at the level that I showed you earlier with a monthly trend line. But I think it's going to be a bit of a wait and see situation anyway. So I'm probably going to cut short. I don't really see me doing anything. The FTSE's just kind of hit a bit of a you know, there's a hint of some downside here for sure, and I suspect that will come. But I'd quite like the downside now just to get long, rather than playing it down. But it's not the worst thing in the world to go short here. Is not the worst thing in the world, and maybe as the day goes on, I probably will do that. But I think I might wait for that data point today rather than getting in too early, just in case the data point does actually boost the FTSE up. So I'm gonna look for a long, but I may do the same thing as I did yesterday. But I've got some management to do on my trade yesterday still. Obviously, I'm still in those, so I've got some management to do on those. So it depends on how that really unfolds and how the chart unfolds after the data. So I don't have anything else. If anybody's got anything, then let me know. Otherwise, I'm going to cut it short. I think there's going to be one of those days we need to be a bit careful. Looks like the market's a little bit frozen. And probably not going to move too much, so we can't jump into something which is not trending. You have got a great trend there, LT. You've got the pound dollar, which looks great. You know, I really like that as a potential trend. I think it's looking good, and we've got data today from the pound, so that could really boost. You know, when you have a data point on its way, then that's gonna create some volatility, which is really good, you know, and you're already in the right direction. I don't know where you got in, but you're already in the right direction. If you've shorted this, this is a really good move. I don't think this is going to turn around, you know, too aggressively. Keep those stops wide until those until that data point has been released, just in case you get a bit of whipsaw. But I don't think you will, but just in case you do, and then see if the data helps you out, because you've got a good one here, and I would take this one down as low as you possibly can, and even consider a long to go, sorry, a short to go long, because you know you definitely want a long on the pound, but I just don't think it's here. I think this one could come down quite a bit more, maybe down to 130.59 or 130.60, something like that, before you need to be worrying about looking for upside. But looking good, mate. Well done for that. Well picked. Right then, guys, I'm going to call it. I'll speak to you all in the morning. Have a great afternoon. I'm not going to do anything, so but that's the reason I'm not going to sit in front of my charts. Don't think it's good practice, and I've got some work to do on the trades that I was in yesterday. So I'm just going to check out some levels and make a few decisions, and then we'll do it all again tomorrow. Be back same trade time, same trade channel. Maybe another short one again. This is going to be the way it is. We'll just sort of see what the market's like. Bit tough without Jeff, but just wanted to pop in and say howdy anyway. No problem, LT. Have a good day, mate. You're doing really well with that. Keep riding it. See you in the morning, guys.